We have a very diverse panel today, and this stretches across, obviously, to somebody who just looks at a fintech just from the outside. It might look like, oh, credit, payments, distribution, but each one of our panelists today is doing something so niche yet disruptive yet massy that it's a very interesting combination. What I'll do is I'll let the panelists just do a quick round of introduction of themselves, like just introduce yourself and just a line about what your company does. Maybe Pallavi, we can start with you first.
Hi everyone. My name is Pallavi, and I'm the co-founder of ProgCap. We are a B2B supply chain financing company, and what we really do is we tie up with large corporates, and we onboard their entire distribution channel, ranging from the brand to distributor and to retailers, bring them on a platform and provide credit to them. And we have been doing this for the last 6 years, and we've done close to 20,000 crores of financing now across 500,000 odd customers, and that's been the journey. So looking forward to the interaction.
Thank you. Swati.
Hi, everybody. My name is Swati. I'm the co-founder of CashKaro and EarnKaro. So CashKaro is India's largest cashback and coupons app. If you're shopping online, you can get extra cashback via CashKaro. Where this becomes relevant to today is because we are also the largest performance marketing channel through which brands acquire customers. So we are the largest affiliate for Amazon, Flipkart, Myntra, all the e-commerce sites. And now we also have an arm called BankKaro, where you can actually get cashback on credit cards and loans. So we've also fast becoming the largest affiliate for SBI, Axis Bank, all different cards, and foraying into fintech with that. We have about 20 million users at CashKaro, so we are able to see data of who's shopping where and which financial instrument will be most relevant for them, and that's how we bring finance to the masses.
Tushar?
I'm going to be buying something of CashKaro soon. I heard the deals are pretty awesome. My name is Tushar. I'm the founder and CEO of Stashfin. We are a consumer lending business. We provide a product which is similar to a UPI and credit card. And we've been around for now close to 6.5 years.
Manish.
Hi, my name is Manish. I am founder and CEO of KredX. We are into domestic and cross-border trade finance. We started as a domestic trade finance. We recently moved one of our unit to Gift City, and we started a cross-border trade finance also out of Gift City.
Souparno.
Yeah. Very good evening, everyone. Thank you for having me. I'm Souparno. I work as the CEO of a company called Balancehero. We operate with the consumer name True Balance. We are possibly the only fintech which have a PPI perpetual license. So we are into payments as well as in lending. On the lending side of it, we are in the unsecured STPL space with a primary focus of Tier 2 plus. So 85% of our business comes from Tier 2 plus. And that's kind of in alignment with the mission what we have, that's finance for all. Thank you.
Sure. So, I just wanted to start with, it's FinTech 2.0. I think we're in 3.0, 4.0. I don't know, but there's a different version of FinTech and a different face of Indian FinTech that comes out every single year, right? And with every single cycle. I want to start with you, Pallavi, and go around the room quickly. Is the fact that we've seen the Indian fintech story move from payments to credit, right? To now it's like consumer credit, credit card, BNPL, moved from there to now B2B, niches, etc. Where do you think is the next frontier that you see for Indian fintech, considering that now we've started occupying niches as well and starting having a lot of competition there? So where do you think is the next frontier?
So I think, as an industry, fintech has seen massive disruption.
Yeah.
We have moved from a hyper-growth stage to actually now the focus shifting to value creation, profitability, sustainability. And the numbers are mind-boggling. We talk about 87% fintech adoption. We talk about crossing 10 billion transactions. I was reading that out of the $350 billion of consumer lending that happened this year, 47% of it actually was done via fintechs, right? So these are the numbers, that make us the second largest, fintech market in the world. But interesting to note that much of this growth is actually coming, like you said, from payments and consumer lending. In my mind, the space we operate in is in SME lending, and Very clearly, I think, as if India has to grow at a pace at which it has to grow, we just cannot ignore the SME segment. So coming from, the entire fintech story has been centered around consumers. And so moving, I think the next frontier, according to me, is going to be the SMEs and mid-market, looking at 63 million MSMEs, largely under-tapped, under-penetrated, under-serviced. It's been, going to be an exciting era for SME lending. It's been an exciting era for digital lending, and I think that's where the biggest growth avenue is, and that's where the maximum impact is, because that's going to contribute to close to 40% of the GDP. So both in terms of revenue and growth, and also in terms of economic output and GDP, that's according to me is going to be the next frontier.
Swati, obviously with BankKaro, right, you've kind of cracked the model of, how we've seen the next set of companies evolving, of saying that, now we have data and now we know how to target, but now also we know what is the exact need of every customer, and we can help larger financial institutions go much deeper, right? So, that's one frontier that's playing out right now in this current season, so to speak. Where do you think, what's the next, right? How do you see fintech kind of evolve from there?
I think that when we look at the next frontier, for me, the next frontier is also what are the next audiences to target with our current products. Yeah. Because I think that there is so much more to do on credit and loans. And neo-banking, by the way, is my answer to what you're asking, sure, right? But, the other thing I want to add is that, like on CashKaro, when we started giving cashback on credit cards recently, it is the fastest growing category for us. There are so many people today, including me, who have applied for my first credit card now, right? And there are tons and tons of people who, when they see Amazon, Flipkart sales are coming, 10% SBI mein mil raha hai, 10% ICICI mein mil raha hai, they're coming and applying now. So there's just so much to do. Plus, a couple of years back, we launched something called the CashKaro Store Network, where we have Kirana store owners placing orders for walk-in customers via CashKaro in rural India. So from that segment also, we are seeing so much take-up on finance, because rural India today is, it's hungry for credit, it's hungry for financial instruments, yeah, and someone needs to go and explain how it works. So I think the next frontier will come from going deeper into what we have. Number 2, solving for education of current products. This is a massive gap that we see. And number 3, looking at different audiences that are not here right now. And neo-banking is one way which is actually addressing some of these new audiences.
Yeah, and I think what you're essentially also doing with BankKaro is, earlier people used to find deals on, let's say, e-commerce websites, etc. Now you're saying that people are also finding credit card deals, right? And what's the best for it?
Yeah, if they apply for Access SBI credit card, they're getting 2,000 rupees cashback from us.
Yeah.
So they're like, okay, this is great. I'm getting a credit card and I'm getting a reward for getting the same. Yeah. So it's a win-win.
Tushar, you're not right. I'm sure you're not buying that solution. Eh? You're like, I'm going to do my own solution.
He might, because when he compares our cost of customer acquisition versus Google or Facebook, Stashfin will become a client.
Actually, we don't do much performance marketing, but I think it's a great idea. Look, I think we're still scratching the surface, so I don't think there is a need for 2.0. I think, just speaking about credit cards, the card penetration is pretty low, 3-4%. The number of POS terminals are about 10 million or so, I think maybe 15. There are two sort of observations from the business I run. One of them is that we think UPI, for the reasons Swati mentioned, because it's low cost, we will see a massive demand for credit card type solution on UPI, which will not be submitted by merchant discount rates. We're seeing that happen in our business, and we see that trajectory happening just year on year, month on month, 30% growth for the most part. The second area we see kind of happening would be embedded finance. I think the data arbitrage between bureaus, bank statements is kind of like over. So we see that a lot of platforms, let's say perhaps like CashKaro, would have a lot of insights into consumers, which we need to now use to price products better, to make it easier, better. So we think that embedded finance would be another way to kind of grow in the categories we are in.
So you can start seeing the differences of the panel, right? We've started with SME lending to neo-banking to UPI on credit. Now I have to ask you, you've been one of the first Gen 1 companies of invoice discounting in this country. So please tell us, where do you see the next frontier? You're not allowed to push for your own...
I think two things. One is B2B payment and another is cross-border payment. These two things I think is really which is basically forget penetration. We haven't done anything. So and if you see recently, I think 2 days back, RBI came up with payment aggregator for cross-border payment. So I think they realized it early. And India is heavily regulated on the export-import side, right? So which makes it, I think. Maybe India and Malaysia are the two of the biggest regulated in terms of it, right? So it makes very complex for any exporter to work on it, right? Now, similarly, if you look at UPI, we claim B2C, we are the best and decades ahead of the world. But as soon as I move to B2B, we are still into checks, right? Still, we are giving checks, still we are giving the usual 90 days payment, 60 days payment, right? And this has a huge difference between B2C and B2B, because in B2C, you are the end consumer, you are consuming, and that's why you are paying immediately. In B2B, you are not the end consumer. There's somebody else who is going to consume the product. You have to do some value addition, and then there is somebody else who is going to actually consume it. So until unless the final consumption is not going to happen, everybody in the line is not going to get paid, right? So which makes it very difficult. That's where your ProgCap is doing the supply chain in terms of the distributor are not consuming, right? End consumer is consuming, so he has to keep the inventory. So it creates a lot of problem in the B2B payment space, which is not solved. Now the adjoining area is also the cross-border trade finance, right? Now if you see the some of the data that you have, we do almost around $35 billion of export every month. Guess how much we are doing the financing out of it? 2 billion, right? So this is per month. Almost $33 billion is free for anybody to catch, and it's not getting, nobody is taking care of it, right? So, and we are talking about $5 trillion economy, $25 trillion economy. Until unless you finance these export, you can't become that. So I feel these are the two which is very much going to come very soon.
So the panel is tied on B2B versus B2C. You have the...
No, I'll not create a false binary around it, so that way it's there. I think the point which you make, and I keep emphasizing this one thing, the first principles never go away. Like you might have evolutions around it. So if you do a 2x2 around, let's say, depth and scale, and then see like what's the sweet spot. Are you working towards anything which brings in value, which is the depth part of it? And are you working towards solving a problem at scale? So that's the lowest common denominator. Now, when you do that kind of a parlance, you will see things like lending, possibly payments, for sure wealth take. Those would be the sweet spot quadrants for sure. But what's fundamentally happening is there are two layers in terms of the overall fintech ecosystem which is evolving. As of now, if you see, the journey has been mainly focused around the frontiers, in the sense like people who are at the last mile and people who are really pushing the serviceability of the market. But we are coming at the threshold where, let's say, even we are in lending, right? Be it be lending or payments, it's not good enough anymore just to solve the last mile problem. We need a kind of a backing in terms of maybe RegTech, as we were speaking the other time, compliance tech, RegTech, even people and technology and the platform enablers in fintech who are actually solving the supply side of the collaboration problem, in the sense like how do you do a co-lending with a bank, or how do you kind of do an FLDG with large wholesale NBFCs. So put together, these would be the two possible evolving space. One is when it comes to the frontiers, just stick to the first principles. Are you solving something around depth and scale, and therefore be it be a wealth tech, lending, payments, whatever it is. And the other part of it, you can still be at the ecosystem, be an enabler in terms of compliance, RegTech, or even a supply tech, and still can do very good for fintech. One point for the next 3 to 5 year scale, we all need to appreciate one thing. We are fortunate to be in India. However, this 2.1 trillion, that itself is a limiting factor, the way we are getting wired in fintech. Yeah. If there has to be a next Amazon and Google in fintech, that has to come from India, and if it's not happening, then somewhere we are losing out.
So the next Amazon or Google coming out of India, I want to start with obviously the hot pressing question, which has been regulation, right? And that's been somewhere, I'm just trying to find the right word of not to kind of say it as it is, but is that it is in a way going on everybody's minds. Right? And it's constantly running on everybody's minds of, am I regulatory compliant? If I am even operating in a space which does not have regulation, how will the regulation look like, right? So I wanted to start with you, Pallavi, again, and then, I'm going to I'm giving you fair warning that I'll start the next question with you. So it'll be a reverse order. But I want to start by asking you this, especially when there is so much activity happening in terms of regulation, right? And we have the most active regulators in the country, in the world rather, and in this country. How are you looking at innovation then, right? How do you look at newer product cycles? How do you look at launching newer products, especially at a space where, even if a regulation does not exist, that the regulator is constantly watching and there is scrutiny?
Okay, I'll try to be politically correct. See, look, the regulator only has one agenda in mind, and that is customer protection, right? So whatever we do, I don't think our, if the regulator was not innovation friendly, we could not be boasting about, the UPI story, the account aggregator framework, the India stack, right? So regulator is definitely pro-innovation. We talk about regulations constantly evolving. I think regulations are following the innovations constantly evolving. You're all trying to do all sort of things, and then regulator is trying to catch up to say, okay, let me find out if there is some loophole. But the other side is that the regulator is only coming into play when there is a certain level of scale and maturity. So the innovation, I think we saw a decade of innovation, not only in terms of the broader infrastructure from the government, but also, all of us. And I think the regulator has been pro-innovation so far. The only time where we start to see, okay, now the sector matures, I look at it in a very positive light, because now there is a recognition of what you're doing, right? So there is more trust in customers' mind. You are regulated, so you know what are the guardrails under which one needs to act. And as you will see players mushrooming because the sector or industry is working well. It gives a level playing field. It sets up the regulations. It sets up the guardrails on how to make sure customers are not shortchanged, etc. So I think, there is more collaboration required between fintechs and regulators in terms of, being open to sharing, what exactly are you doing, whether it is under the guidelines. The last, at least the space we are operating in SME financing, it's been a beautiful journey over the last 6 months, while it's been challenging. But I think if you look at the longer term, it's a short-term pain to move to digital lending guidelines, figuring out FLDG, etc. But I think the regulations have made it crystal clear on who will do what. If you're into co-lending, then what will be the role and responsibility of the regulated entity or a bank? What will be the LSP do? So there is a terminology. There is a very clear, absolutely no ambiguity on, what needs to be done and how. So I am, at least, I think, and I speak for most of the digital lending companies, I think the way we are looking at it is that we have a lot more clarity, a lot more conviction on what we are building. And I think, there is a gap between fintech, which are not yet regulated entities, and, regulated entity NBFCs. I think there is a little bit of a swaying towards REs, which is expected. But there is also a cognizance of what fintechs are doing. So there is a talk about forming a self-regulated body and SRO, which is into works, and we saw this beautifully playing out with the microfinance in 2000. So hopefully, if that comes in, then there'll be a lot more clarity on the code of conduct for both REs and LSPs. So I think that's kind of good. Going forward, yes, there's more maturity, more stability. So the barriers to entry are increasing. But that's what we are seeing in the fintech sector, that that's more stabilization and regulation coming in.
I'll just put you on a spot for that, because you kind of mentioned on the SRO, and obviously the regulators constantly talking about the fact that there's also a need for it. Maybe I see it as because of the diversity of the ecosystem, right? And how every player might be in the same space but doing things so differently. Do you think that the fintech industry can come in together with the differences that they have in terms of their business models to kind of create an SRO? Like, for example, lending is a classic case where there is a need for an SRO, right? Because credit is so large. You are working in a space which is mission critical for banks, which is mission critical for the economy, right? So do you think that players can come together and create a fully functioning SRO, because, and I quote the word fully functioning there, because that's what's the need for the industry and also the regulator. So what's your thoughts on it?
Look, if you followed the microfinance sector, there was a similar question, and then we came up with Sadhan and MFin as two SROs, and they've been quite helpful, when the situation. So I think we have a playbook that needs to be replicated for fintech industry. Payments SRO is also something that's been recommended. So I think it's in the interest of fintechs, both regulated and non-regulated, to actually work towards it and follow that code of conduct where, you are yourself looking at following the guidelines before it comes to regulators. So I think it's imperative, and it's a sort of a responsibility as a sector that we all hold, that we should work to build that and, work together, come together, despite our competitive spirit, to really, contribute to this and make it a fully functional SRO. It's only going to be defined, it's by the fintech industry and the players. RBI will have a limited role to play beyond the blessings. So I strongly believe that if we all come together and there is a focus, it should be a huge benefit for the industry as a whole.
Sorry, please go on.
Yeah, so if I may add on, I think what Pallavi you mentioned, right? The key word is the guardrails, right? Somewhere or the other in the industry, there is a rewiring for sure it has happened. One is like you see the regulator as speed bump. But if you have spent time and your life in the FS industry, you will appreciate that they are more like guardrails rather than speed bumps. So that rewiring in the industry and within the leadership has happened for good, that's for sure. Now, to the point on SRO, and as you said, like why it is imperative, because even in the lending space, if you look at it, like we have gone from the 1.0 phase in the sense like the digital lending guideline, etc., has actually given the foundation in terms of the taxonomy and therefore the recognition that it's not only the REs, but the non-REs are a material identifiable entity. So that baseline has been set. Now what it matters from here to there is a dialogue-driven regulation. And for a dialogue-driven regulation, you need a representation and you need conversations where you can actually address the elephant in the room. So therefore the imperative of SRO, we have a playbook from the microfinance industry, but at the same time we have good playbooks also otherwise, where it has been a lot more tech-driven. And if you see even in the North American market, the SROs have been a very, very pivotal stance. Also the question therefore is like, is it like one size fits all? The answer is no. Yeah. And you mentioned about the payments, it's already in the works. And the best part is the regulators have given out the framework. Now the framework is becoming the premise for actually having the construct around SRO, be it be on the lending side or be it be payments or otherwise. So, yeah.
I'll come to you, Swati, but before that I want to come to you, Tushar, right? In your own personal view, right? Because as you said, the constructs are very different, right? But they serve the same purpose in a way of sorts for the entire industry. When you're looking at just the credit SRO, for instance, right? Do you think that there is a need now for, because we're very deep into the ecosystem, right? We're not talking about just the, the super apps of sorts and like, companies like yours who've raised money and the valuations that you've raised shows the fact that there is enough depth of, where the opportunity lies. Do you think that when you're talking about a self-regulatory organization and because there is a certain sense of maturity in the ecosystem, a consumer and a B2B credit will have different SROs and there will be maybe a need for the regulator to look at multiple SROs and not just have one for each industry?
Yeah, sure. Look, so from our perspective, we are pretty regulated. We're regulated by RBI. We have listed debt. We're regulated by SEBI, and we also have some regulation oversight by RDA. And candidly, it's been a blessing because, as some people mentioned earlier, there are a lot of bad actors in the space too. Yeah. And by regulation, we actually have a common level playing field, which was not the case earlier. Yes. So I think I agree with you that there'll be maybe 2 or 3 different kind of flavors of the SRO. Maybe
within credit, you feel also?
Yeah, possibly SME would be, has different needs. Consumer credit would be a little different. Payments perhaps a little different. However, I feel that it's not so much to interpret the guidelines. They're pretty clear. It's to probably keep sort of the bad sort of players out. Yeah. So I think that's the larger role which the SROs will play. Yeah. Because in order to be part of the community, you got to adhere to certain guidelines. Yeah. You can't be like fly-by-night operators. So I think that's really the value which the SROs will drive a lot more than perhaps advocacy or framing the guidelines.
Sure. Moving to you, Swati, of course, new vertical altogether, right, that you're kind of dabbling with. And this is something that we've seen, like a lot of different companies when they're going into their Gen 2 or Gen 3 era, what they're doing is we have data, but we now want to target it better. We want to help financial institutions improve their ROIs rather, right? How are you looking at innovation and regulation as both things moving around? Because let's accept it, there's not enough regulation also on distribution if we see, like there is a scope for more. So how are you thinking about the business when you look at it?
See, fintech is more complicated because RBI, SEBI, and IDRI, all three have a right for some regulation in this space. But if we look at something like data protection, now, my only request to the regulator is to think of three things, right? One, that think of how everything is impacted and not only one thing. Yeah. Very often what happens is that, when you look at the regulation on its own, there's nothing wrong with it. It's for the better. And, we probably need to think of those things as we are developing products in the interest of the, consumers and everyone else. So absolutely no problem. It's just that sometimes you realize, oh, but because of what about this? Oh, what about this aspect? Oh, there's no clarity there. Then what happens is things go into a limbo. This part was made clear, but this part was not. So therefore, my second request is clarity. Right, where you clarify everything totally, and thirdly, define the timelines properly.
Sorry to cut you off, but what do you do then as an entrepreneur?
You take opinion from the big four, then you go different places, then you go to the Indian startup group and you say, hey guys, how are you all dealing with this? And then everyone comes back saying, oh, same boat. And then you just wait around, really. So, and that's not always fun because, you get scared. You're also doing the right thing. You're also trying to do what's right for your business. But tomorrow you don't want to be in that hole where somebody said, oh, but why didn't you think of this part? And you're thinking, yeah, but there was no clarity. So what to do? Yeah. So it's not productive, basically. So I think we are not against regulation. Nobody wants to do the wrong thing. In fact, I think most entrepreneurs have a high, code of conduct within themselves because they're being honest at multiple levels, to their companies, to their employees, to their stakeholders, so many people. So we don't want to do anything wrong, but we just want clarity and on time.
I want to move to you, Manish. When you started, the environment was very different, right? And now when you look at the environment, there are possibly 3 players lining up who are doing something far more innovative than what those gen of companies were actually looking at, or what lay in front of them. Now when you look at just regulation coming in, right? Because there's so many entrepreneurs who are coming from different aspects of the tech ecosystem and then landing into fintech, right? And everybody is thinking about regulation. Has the Indian entrepreneur, right, Indian fintech entrepreneur become more cautious while running their business? Is regulation this constant fear that's running in before thinking of the next big idea?
See, I think one thing we have to just make it very clear, that no regulation can run ahead of innovation, right? Always and always regulation will follow innovation, right? As a regulator, I can't go and say, hey, you can't do this which has not been invented, right? So you have to, they always has to follow innovation. Now, what basically happens is a lot of times this innovation happens and it moves in a very hockey stick kind of curve, right? And sometimes, this is how I generally see regulation. This is a line, right? Which is, let's say, a borderline. Then there is a no man's land. And then there is a line which you should not cross, right? So that line. So every single startup in world has started in no man's land, right? If the regulation is clear, then there is already companies who are set on that, right? So the companies who are coming are always coming on no man's land. Now the question is, if these no man's land, if you are too much away from this, right, into a enemy territory sort of, then basically regulator will come and say, hey, you are doing something wrong, right? So as Swati said, there has to be a very high moral code of conduct in terms of where you should draw the line, right? And I also suggest that whenever you feel that there is a confusion, right? What Swati said, there is confusion, right? Now, you cannot go and ask regulator, hey, clarify me this, because they are also not understood anything. They ask them maybe 10 years back, hey, can you clarify me on UPI? I said, what? Sorry, right? So the clarification only comes once the maturity will come in the entire ecosystem. So what happens is, if you are in confusion, tell it to the regulator, tell them that, hey, this is what I'm going to do, right? Do you have any problem? most likely they are going to be silent because they don't know what's going to come. So, it's a tacit approval. You can continue till the time they will come back and say, hey boss, you can't do it, right? And that will happen mostly when you are going the hockey stick curve, when you reached a position where they think that either the customers are not taken care of or the financial stability of the country is somewhere in danger, right? So unless these two things are not happening, they are mostly fine with you doing whatever you do within that no man's land.
Sure. I want to start with you, as promised again. So is the fact that, every single business that we see today, tech business today, is dabbling with some level of fintech, right? And then there is also businesses which are fintech, right? And then there are businesses which are thinking of now veering into and starting up different journeys of how we would attack it. Do you think that looking at how the ecosystem is, there is a need for common licenses for fintechs, right, in a way, because everybody wants to do some level of fintech, but they do not know, what I'm trying to ask you is basically, do we need a starter pack of a license for fintechs? And as Pallavi said, right, like today, distribution channels are getting more and more, so to speak, not digitized, but rather fintechicized, right, in a way to speak, right? So I want to ask you this, like, is there a need for the industry to have a common license?
That's a name you want to trademark, fintechicized.
Fintechicized, okay, cool.
There is a saying which says that in startup, either you die young or you live long enough to become a fintech startup.
I think we're all getting very younger as we're in fintech, so we're just getting younger. But please, on the thing on the license.
Yeah, no, sure. So I'll keep it a little pragmatic here. I mean, in an ideal world, one trademark, one endorsement would have been like a good enough thing, but that's possibly not very pragmatic to look at it. So the key here is to kind of create an identity. Why is it like we are talking about this? There are two parts to it, right? From the ecosystem standpoint, we have to build a trust in the sense like what's right from a regulatory risk standpoint, whether there is no regulatory fear, it's regulatory risk only, right? So regulatory risk, supply ecosystem standpoint, the basic premise of operations of the business. So as Manish was mentioning, right, if you keep the primary ethos right, that for the consumer, doing the right thing, by and large, you are okay. So that one part of it, why do you need a license? Do you need a license to kind of do the business? The answer is no. Yeah. Till the time you have an entity, till the time you are doing the right thing, there are certain contours in terms of the transactional authority, be it you are an NBFC or a PPI license holder, and that is going to be heterogeneous. You cannot have one common license. The other part of it is the consumer trust, why you need. One is the ecosystem play, another is the consumer's trust. From the consumer trust perspective, is there something common which is going to build their level of confidence? It's very difficult to envisage one common license or anything. So it is possibly going to evolve in that space where if it is an NBFC or if it is, let's say, regulated under IRDA, and that endorsement and the awareness on the, for the consumer should be good enough. Today, if you see an RBI ad where Amitabh Bachchan is saying NBFC, that's good enough. You create that awareness, make the consumer intuitively be aware that, hey, if I'm doing ABC, this is what I'm looking at. I do not think there will be one single ISI for fintech. You cannot look at an ISI logo and say like, hey, this is what I want to buy.
Not the ISI across the border.
Yeah, now it has a...
Manish, I want to ask you this, is also the fact that, what happened with the digital lending guidelines, right? I think when they came out, the verdict was very clear. Every single fintech out there said, I want to be an NBFC. And I think somewhere it wasn't even that much of reading between the lines that it was clear that you have to be regulated in this play, right? Is there a need for easier licenses somewhere for fintechs to show to the regulator that, hey, we can do XYZ steps right, rather than actually going in? Because as you also know, there was a lot of demand for NBFCs in particular in the market as well, which were not doing so well, but fintechs wanted to maybe get a license in for that.
I think a common fintech license will be detrimental because what will happen is a lot of bad actor will just take the license and then they will start doing anything. It's more like, what he says, right? Once you get a license, so there are a lot of NBFCs which we know are not, are doing all those hanky-panky stuff also, right? So the common fintech license will actually lead to many players doing many things, right? And in a startup, we have this common phrase called pivot, right? Which a lot of what will happen is you take a license and then you keep on pivoting, and RBI has no clue what exactly you are doing. I would rather take a leaf out of some other regulators, which some of the regulators are doing, is basically what we call it is an open sandbox, right? So it's an open sandbox. They don't give you any license. You come up with an idea, right? Whatever your idea, whatever the heck you want to do in world, you propose, so they will not give you what is the sandbox, whether it's MSME, whether it's consumer, nothing. You propose what the heck you want to do. Yeah. You tell me what is the exit criteria of the sandbox, what are you going to achieve in the sandbox, and there is a very clear path of entry and exit. The only suggestion is make it super simple, right? It should not be a red tapeism and it takes 6 months or 1 year to come, but make it like online, tuck, I applied, got a license, this is the entry criteria, this is the exit criteria, and you come out of exit. Now, RBI can take a call whether they want to continue or not continue. That could be a better framework rather than giving a full-fledged common fintech license.
Which they've also done with the cross-border thing, right? Which
yes, I mean, just do it in a boundary, right? The guardrails, but don't make it like too much for everybody. It should not be like I'm a startup India, everybody is taking a license of startup India, right?
According to you, Tushar, I also want to kind of change a little bit of this question to you is, what is the right thing to think about licensing, right? Especially for a new age company, right? You can really build your loan books really, really fast, right? If you're really doing it well. But what is the right way? Because, in the middle, we did see kind of fintechs thinking, oh, let me just acquire a not so great NBFC so that I do have a license somewhere, right? And that was the thinking, or at least the regulation pushed, the companies in that direction, at least to think for entrepreneurs to think that way. So what is the right way?
So for someone who deals with 3 or 4 regulators, we certainly spend a lot of time on coordination. As other panelists mentioned, may not be one size fits all, may not work, but I think a common window would work. A lot of times we see overlapping regulations which make it harder. And as Swati mentioned, we spend a lot of time on the big fours and money on big fours trying to, kind of go through the regulations. I think a common window would certainly help. The other piece I would say would be a little bit like scale-based regulations. And they've done a good job in the sort of MSME space based on capital invested in the business, scale of customers. I certainly do think that some of the regulations prevent innovation in the early stages because someone may not have the money or the capital to, let's say, get an NBFC license. And it's a fairly onerous process to get the license as well as maintain it. But overall, I think common window would help because I think the reasons why those regulations exist, we all agree are for good reason. But the dialogue could be a little bit more smoother and faster through a common window.
Okay. I want to ask you this. I have my eye on the clock. But I do want to ask you is, I think we're really at an inflection point at Indian fintech, right, where we've seen its level of maturity come in. And, if you look at most of the global economies, the Indian fintech ecosystem with its diversity is far ahead, if I can take the liberty to say that on behalf of the ecosystem. I wanted to understand, is there a space for us to now replicate this playbook onto other international geographies? And people can feel free to please chime in if you have an opinion, but Swati, please.
Achha, so you jumped to the next question. I was thinking
Yes.
answer of the previous one only, and suddenly I was like, oh, he's asking something else. But on that point of regulation, I want to just add one quick thing.
Yeah,
so when
sure.
data protection came in, okay, my team came to me. They said, we've met one of the big 4. They're charging 40, and we think it's a bit high. I said, guys, this is important. 40,000 we should be able to spend on this stuff. It's really important. Then they started laughing. They said, it's 40 lakhs. I said, what? And 40 lakhs for advising us what we should do. So my point is, why is regulation not clear enough that my in-house 3-member legal team is not able to figure it out, that I need to go out somewhere, pay 40 lakhs for them to tell me what to change in my product, right? So that is the challenge with regulation. It's not clear. So if we want to take this playbook outside, yes, surely we can. In fact, for many of our products, we are seeing that. But for us to be able to do that, there's a lot of experimentation more that we need to be able to do in India itself and have the ability to do that. I mean, as a business, CashKaro, EarnKaro, last month, we have sent 1 billion clicks to our partners via traffic. Right? That's the amount of traffic we are sending. So we are able to analyze who's shopping where, what are they buying. Therefore, we can give them credit cards and loans based on that. But today I can't do that because I don't have the license. Right? So that's why, if we have to take it out, we definitely can. The way Aadhaar has worked out in India and the way we've set up the India stack is definitely an example for anyone. So there is room to do it, but I think for that, we also need a little more room to play in our home ground first.
My quick take on this would be that, look, we can export it outside, but the scale would not exist. India presents a very massive opportunity in terms of just demographics, a lot of people who use the product. So maybe Aadhaar, UPI would work overseas or other markets, but this is a pretty compelling market to be.
Tushar, I'll argue on that a little bit with you, is the fact that, we're also seeing fintechs, for whom the Indian environment is choosing to be not super conducive, also trying and getting more licenses abroad. And I think that that's becoming a trend for some of the guys, right, where they are trying to see maybe in international geographies until the Indian situation is, I don't want to take names, but Indian situation is getting better. Let's kind of see as an operating model for outside as to how that works.
Look, I mean, my thought on this is that obviously the Indian consumers are very value conscious. Yeah. If it works here, it'll likely work somewhere else. Yeah. But we also have a very heterogeneous base of consumers. A lot of the low-cost solutions also are because people have lesser incomes. So, look, I personally feel it's still a very compelling market to be in. And if you can make it here, you can make it somewhere else.
Pallavi, your view on licenses, and I think we'll have to move to, we have another 2 questions, guys. Like, we're really running out of time. So what's your view on the licenses? On the fintech license, on a common fintech license or a common, Manish said about Sandbox.
We've switched back to the previous question.
Yes.
All right.
We're playing tiptoeing around, so yeah.
You wanted to skip Swati on that? Okay. I don't know, if I'm really not able to, give a very concrete answer on where, because I'm not able to understand what a common fintech license really means in a heterogeneous space that we work with. There is lending, there is payments, there's insurtech, wealth tech, regtech, and I don't know what all. So there is a lot going on, and I think to my mind, fintech is not a terminology, or it's a very broad brush, and also it's a way of doing business. It's I think a lot of things that now the banks are doing can be classified as fintech. They're trying, right? NBFC fintechs. So I personally don't think there is a common license to apply, because at least understanding from the regulator side also, there is a question going on. What is the definition of fintech? Someone can please educate us. Can we make a list of all the fintechs? That's been the question. So we really, like collection as a service, is that a fintech really? So I think the definition is not clear, and that's what everybody is asking for, what can be classified as fintech. And before you come to regulate us, like, can we really get a sense of what is the ambit under which we can operate? Is there a open platform, like to your point, Manish, you said that, can we get a quick answers to some of the questions we have or dilemmas we have in terms of can this be allowed or not allowed? But it's a tricky one in my view, because unless you have innovated, you've tried, you've scaled up, it's hard to be able to regulate unless you know what it is. So I don't have a very, very clear answer to, fintech and license, thought process. But I do think it's very heterogeneous, and I don't think we can arrive at a common terminology and common license.
I was thinking something, and I think all of you will just look at me in a poker face, is that if that's the case, then how do we think of an SRO?
That's where multiple will be there.
I would react to that. So basically, on the SRO, it's on digital lending, or it is on payment. So again, it's not.
Theme,
it's not. Yeah.
Quickly, I wanted to kind of have everybody's view on this. We've run out of time. So the request to the panelists is to make it quick. Is one thing that also comes up now is we have regulations coming in, we have compliance costs coming in, we have competition coming in, right? And there is a lot which is happening at the same moment of time. There is newer frontiers of business that also you got to go. So today's fintech is not 0 to 1. It's 0 to 50, and how do I think about 0 to 50 while I'm doing 0 to 1, right? I want to ask you, in all of this, how have revenue opportunities shrunk? Are margins under pressure, especially when we're looking at some of these spaces which are so fiercely competitive across the stream? Though we say depth of the market, depth of the market, depth of the market, but to be honest, there are fintechs who are making big valuations only on focusing on the top 50 million as well, right? So, and if you look at it, there's only the top 400 million that we've reached over the last 4-5 years. We've just been talking about 400 million digital users, 400 million this, 400 million that. So, is it finally that we are inching into a bubble where there might not be enough margins for fintechs moving forward? And is there a digital bubble that we have now created, and India is not moving the needle more than that? Because margins are not making sense. Yes, you first.
No, I have a little more optimistic view towards it, to be honest. Yes, there are pressures. There are things around compliance, and Swati, as you mentioned, there are a lot of things which we also have to spend money towards. But having said that, that's not going to be a material dent in terms of let's say the P&L, the unit economics, provided you are doing fundamentally, which is asset creation. Yeah. In the sense, like, if you're doing something which you qualify as fintech because there is a money trail, but you're not delivering value plus asset. There are two parts to it, right? There is value which gets delivered by something which is like a short-term benefit, and then there is a value which gets delivered in terms of like someone at the end of the day, someone being able to create an asset, be it through MSMEs or be it individuals, whichever way. Till the time that is taken care of it, always, even in a price-sensitive market like India, we will have enough opportunity to have margins and good P&L for the growth. So there is no two doubt about it. It's not a tapering happening in India, and somewhere or the other, I would take a little more optimistic view that what beyond what Tushar was also mentioning is we are solving for India 1, 2, 3, 4 kind of a thing, right? So if you see, still there is lots to do. The serviceability of the Indian market has a huge headroom. We are talking about asset, right? Fundamentally, we are talking about financial inclusion. We are just scratching the surface in terms of payments, enablement, and let's say bridging the credit divide. But the other side of the spectrum is like financial well-being. There's so much to do in terms of pushing the serviceability and still make decent P&L. In India itself is good enough, but at the same time that India 1, 2, 3 kind of crack between cost, distribution, and a good product will also possibly help us to go to other geographies as well.
Same question to you, different perspective, is the fact that, Gen 1 has kind of really burnt its money into kind of acquiring those consumers and opening the market, right? Gen 2 is possibly not doing it because it's a very different funding environment, a very different macro environment out there, right, where margins do matter. Do you think that we're not pushing the needle in terms of more financial inclusion?
I think, valuation or no valuation, I don't think valuation has too much to do with the margins and all. Finance in general, and not fintech, but finance in general, there's no TAM problem, right? There's nobody will ask you ever that what is the TAM of this, right? You're talking about insane amount of TAM, right? And then you are talking only about margin. So even if you see payment was always like few bips, 1-2 bips, right? Personally, I also believe that India is a duopoly market. Take any sector in India, there are only 2 players. If there are more players, the sector has not matured. This is pretty much anybody. So till the time the sector is not matured, there will be margin pressure, right? Even if, let's say, telecom, 5 players, all are coming back, price war, blah, blah, blah. Finally, Jio and Airtel, right? Vi is still trying, but fundamentally it's... So take any sector, it's always going to be a duopoly. Till the time the duopoly will not exist, there will be margin pressure, and after the duopoly, then basically things will start moving. So even in payment, if you see previously there was 1 bips, 2 bips, now we are seeing Razorpay is profitable, Pine Labs is profitable, right? So, and not profitable by EBITDA, blah, blah, adjusted and all those things, but actually profitable possibly, right? So these things will go through that cycle of it. Every innovation, there will be competition. The competition will push you to the corner. And then there will be whoever is left in the field is going to start making money. So I will just take valuation out of the margin game.
So what is your opinion? Are we tweaking a lot?
So from our perspective, it's operating leverage. So you're right, costs have gone up, payroll costs have gone up, compliance costs have gone up. As the scale has become larger, some cases margins have shrunk. But the way you've overcome that is just operating leverage. You just have massive scale now. We grew like 80x in the last 4 years. And that revenue, which is from increased scale, just kind of can offset the cost. So we are more profitable than we were last year and the year before. Not because we're making more money per consumer, but because we have a certain fixed cost and we have just more scale in the business.
Very quickly, I think there are enough margins, while there is squeeze, but still there's enough. And I think why it remains attractive is because there are so many people still to address, so many people still who need financial instruments. And like I was saying earlier, if we invest in education, we'll be able to recoup the cost that we are spending. Because more people need to understand how these products work versus being scared of them, which is the same curve that online shopping went on. Educate versus saying ki nahi, online payment nahi karna, sirf cash on delivery. We've come up that curve in shopping. The more we do it in fintech, the more adoption we will see.
Pallavi, are we really going behind the Bharat story rather, right? And the new gen fintechs really going behind the Bharat story or not? Because Radhika is here, and I think Shop Clues and so many of those companies were actually in a way market creators, right? So are we seeing the fintechs today of market creation? I'm not talking about ProgCap, but just the outside of it.
Yeah, I mean, I speak for ProgCap and the other fintechs. That's where the market is. We haven't scratched the surface, at least in terms of SME lending. The urban market is fairly okay. At least for us, most of our customers, 90% of our customers in tier 3 towns and below. So the market is there, the margins are there. If you go to a shopkeeper in Delhi, you will find that they will have certain options of credit, right? But if you go to a tier 3, tier 4 town, they really don't have any avenues to get access to any form of formal credit. Yeah. So that's where the demand is, that's where the margins are. But having said that, the margins are shrinking because there is high cost to acquisition to be able to make that reach happen. I was reading that, RBI report which talked about it in the last 5 years, I think, if I'm not wrong, then there's a 10% shrinking of interest rates, reduction in interest rates for consumer lending. I don't know how correct that number is, but I just got to look at that. So there is constantly increasing pressure of reducing the rate of interest. Cost of funds are not going down by any means. There is high cost to customer acquisition. There is high cost to compliances, and adhering to compliances is something that you have to bear that cost. Not adhering has a huge cost. So, there is pressure in all directions, but at the same time, that allows us to become operationally more efficient, find out, what are the levers. And despite all of that, there is margin, and we are seeing that most of the fintechs that have reached their stabilization phase are now gearing towards profitability despite all of this. And to Swati's point, I think that's a result of the sheer volume and the Bharat story that's allowing us to be able to access a large customer base.
But do you think that with all that you said, there are enough fintechs which are actually now saying, let me still go to Bharat? Or are they taking the route of saying, you know what, let me not think about this right now, let me just move into this small bubble of very monetizable users that we have and cross-sell and monetize more, rather than actually opening up the market for more and more people to kind of come? Are there enough fintechs that are actually thinking like that, like you, for instance?
I think we need to separate out consumer lending fintechs from SME. I do believe that, at least in the SME space, the space which I operate in, the Bharat story is where the market is larger, more, that's where the demand is higher, right? So on the consumer space, I think we are still looking at the urban elite, salaried professionals, and, that's where, and we are able to underwrite them better. So I think we need to look at these two separately, and, specifically if we talk about lending. So I think more and more fintechs in SME lending are looking at the Bharat of India, to address.
But then even on consumer side, we are definitely looking at Bharat. All our clients who are financial are focused on Bharat. They're willing to pay us more and more if we can get customers from there. Because there, if you get one family member, they also act as mini influencers who, attract others around them as well. So it's worth investing in Bharat for sure.
Well, I think we can continue going on, and it's a never-ending saga. So ladies and gentlemen, Thank you so much for actually joining us.
Thank
A
you
big
so
round of
much.
applause
Thank you.
for the panelists for doing this treadmill of a run of this discussion. Thank you so much.